Hello all stock operators. Have you missed me? I've missed you, sort of. I want to start by apologizing for my slow updates. One might almost think I've started working for the SEC. The reason for my absence is that I've been on vacation. An unsuccessful attempt to find relaxation and inner peace in my otherwise constantly nervous existence in front of the stock screens. But as a person suffering from addictive behavior, I couldn't stay away from the screens, and I probably got more radiation from my mobile screen than from the sun. I watched every tick on the chart in my long-term investments. Like a true degenerate basement dweller. In other words, I'm happy to be back. In this video, we're going to take a look at my magnificent portfolio. How have the companies performed in 2023, and what is my current exposure? I bet your meat rod is throbbing now that you're finally going to see what Bob owns, huh? Mine too. So let's get into it. Those of you who have been following the channel and watching my videos know that I own semiconductor companies Taiwan Semiconductors, ASML, and STMicroelectronics as a foundation. These can be considered my long-term cases, and I owned them before the start of this year, and I'll continue to hold them until the end of the year and hopefully for an eternity. If, for some crazy reason, you're not familiar with these companies already, you can check out my previous videos. These bad boys have performed well throughout the year, and I have nothing to complain about. ASML is up 22% for the year, Taiwan Semiconductors is up 25%, and STMicroelectronics is up 31%. With a little quick math, you can say that my long-term portfolio is up an average of 26% for the year. Not too shabby. With my small portfolio, I can almost buy myself an Nvidia share with the profit. Just kidding. I'm filthy rich and can probably buy at least 10 of them, minimum. Suck on that. Then we also have my bet against the AI sector, which is Perion Network. The company delivered a surprise earnings update and raised its full-year guidance. Amazing, you might think. The stock must have shot up to the stratosphere, right? Not exactly. In fact, the stock is even lower since that news. It seems like a company that's going to hype up AI needs to have AI in its ticker for Robinhood to notice it, right? Anyways, my position is still in profit, and I'm holding on for now. The company is performing well, and it seems like I'm still right in my thesis that there's a lot of sexy growth to be had here. But we're not seeing the same surge in the stock price as with other AI companies. You might almost think their stocks are injected with cocaine. Which would have been lit. If you happen to have a better memory than a goldfish, you'll recall that I also had a position in Tower Semiconductors, which was a bet on Intel's acquisition of the company going through. Unfortunately, those darn Chinese folks dragged it out, and the agreement deadline expired. No deal. However, I'm still holding on to my position, and it remains to be seen if I can swing it into a profit in the end. I didn't like Xi Jinping and his buddies before this, and I like them even less now after they've ensured that I've lost money. Maybe I should send an email to Mr. Xi and ask for my money back? What do you think? My latest investment is in a pioneering and disruptive fintech company that's at the forefront of the global ESG movement. This innovative firm is revolutionizing payment solutions worldwide with its cutting-edge, seamless product portfolio and services, setting new standards for sustainability and efficiency in the finance industry. That's how it would sound if I were Kathy Falcon Woods at ARKK Invest. But luckily for your sake, I'm not. My most recent investment has been in the good old PayPal. The stock has been severely abused in recent years, and from its peak in 2021, the stock is down a staggering 80%. When a stock tanks by 80%, one might assume that the company deserves it and that the profits, cash flow, and margins have all performed like shit. But one would be completely wrong to assume that about PayPal. This old stalwart is performing better than ever before, more or less. As you can see, the profits and revenue have continued to climb while PayPal's stock has completely imploded during this time. I didn't know fusion was possible until now. But apparently, PayPal seems to have solved that problem. Nice. As the big-brained man that I am, I quickly understand with my strong math skills that higher profits and a lower stock price mean a lower valuation. It might be too complicated for the average person to grasp these extraordinary math skills. Let me explain it like this: your chicken nuggets initially cost $10 for 10 pieces. That means one chicken nugget equals $1. Since then, McDonald's has lowered the price of the chicken nugget box, but there are still 10 pieces in it. The valuation per chicken nugget has come down, just like the valuation of PayPal's earnings has come down. PayPal is currently trading at a P/E ratio of 17.7, which can be compared to the average over the past years, which is significantly higher. This is also not the first time I have been poking into PayPal. I lost my virginity to the stock after the last earnings report and bought it on May 10th. As you can see in the image, I have a blue arrow. This is where you can truly see that my intelligence is unmatched. I, Bob the operator, have developed my own valuation algorithm that tells me when stocks are worth buying based on fundamental analysis and when to sell them. I try to follow my system religiously, and so far, the results have been impressive. I then sold my virgin position at the purple arrow, which indicated a sell signal in the stock based on my algorithm. It turned out to be a decent move, and after some scalping here and there, the total profit amounted to plus 17%. But as a man who has, for the first time, tasted the grass between a woman's legs, I was hungry for more. I couldn't get enough of the doughy taste from PayPal. More, give me more. I was sitting without a position in PayPal and didn't know what to do. But then, one beautiful day, in early August, my algorithm pinged me and said, "Bob, it's time to enter into PayPal." Oh boy, did I want to enter. But as you can see, my retarded algorithm didn't get it entirely right, and I had to initiate the position against the wind, resulting in me averaging down my position. I guess everyone has heard of dollar cost averaging, right? Ha! So the blue line now marks my average entry point in the stock. Based on the valuation and the technical situation of the stock, I have a target price of $72. However, I believe more and more that this could be the long-term bottom everyone has been waiting for in the stock. If the stock market deity, Derivatus, is on my side, I will trail this position as far as it can go. Since a stock price of $73 would imply a PE ratio of 20.2, all else being equal, I believe there is more upside potential to be had in PayPal in the long run. Good folks, these are my current positions, and I feel quite comfortable with all of them. Well, maybe not so comfortable with Tower Semiconductors. But who the hell is comfortable being down 20% in a trade that was supposed to be easy money? I suppose there are no easy money out there. Unless you're a girl who's either starting an OnlyFans account or pretending to be an NPC on your spare time. Until I start growing some boobs and a vagina, I'll keep trying to make my money grow in the stock market. Hopefully, my current holdings will help me with that endeavor. My name is Stock Market Operator Bob. If you like what I do, make sure to follow the channel, like, comment on what you want to see in the next video, and share this video as if it were a Chinese virus in 2020. No names mentioned, no one forgotten.